So we're live. Welcome to the Independent Investor Channel. For you guys that have tuned into the live stream before, I'd like to welcome everybody that's been part of the live stream before. This is something that we do every single week to generate stock conversation about what's went on in the previous stock market. If you guys can give me a thumbs up, please, if you're hearing it. Let me know that the audio is coming through fine. Let me know that I don't have to make any adjustments on my end. Obviously, we're working with modern technology. Thank you, Ernest, guys. I appreciate that. Obviously, just a ton of conversation in the group, and that typically is a lot of what it takes is to generate some conversation. Sometimes I feel like it requires investing requires you to be wired a little bit different to succeed in the stock market, because I question all the time why more people don't participate. And I think really a lot of it comes down to lack of preparation. It's really good to see some of the normal folks joining into the group, and also some newer folks as well that I didn't recognize. Some very, very kind comments come through the channel. I've obviously been retracting a little bit on the channel for weekly uploads. I'm just doing about one upload, and this is going to continue the Friday live feed. We're not going to miss any of those. These have actually been very, very successful for me, and I actually foresee in the future filming actual direct help. So what I do envision is actually having folks have the ability to call in and just talk to me directly, because I think a lot of that magic that happens, as far as I'm concerned, is missed, because this is really my thing. I really enjoy the live stream. I love the interaction with folks. I really like to hear where you guys are coming from, because at the end of the day, the Independent Investor Channel's never really been about me insofar as I wanted to provide a message and make sure that that message was being received by folks. That's always really been the goal from the beginning. I'm going to give it a couple minutes to allow some of the folks who've got their notifications through the channel notifications make their way in. I am not working off of an agenda this evening. Certainly want to just kind of shoot the breeze with the group here. There's been a ton of topics here, so I've been reviewing the content that's come through for me. Definitely a little bit more than I can respond back, but definitely some talking points. Always with the aim of speaking to folks. I imagine that you guys are, sitting in the comforts of your home, tuning into YouTube, as opposed to tuning into a sitcom. And I think that's really where a lot of direct entertainment is coming from, is that you can kind of consume, really kind of get to know. I really am aggressive on trying to make sure that you guys have as much transparency about who you're listening to when you tune into the Independent Investor Channel. And I think it's easier to resonate with the message if you kind of understand where I come from, where I've been, what I'm doing now, where I'm going. And I really think that helps. I've got one channel in the creator in here. I've got Dave is in the group here. Average Joe just popped in. Certainly allowing just a couple minutes for the guys to pop in, but Average Joe, Dave just did an overhaul of his studio. Man, he did a pretty good job. So give some kudos to him. At least he's not shooting from his living room like I am. But hey, we make it work for the meantime. I'll allow the group to go on and kind of build up a little bit, but I do really see that as somewhere that we're going. I really think we do a really good job of providing transparency through these live streams, but I'm actually limited a little bit, because when I actually do the cross dialogue and the amount of questions that I'll ask somebody to really get down to a solution for somebody, and when we come to an agreement on what a few avenues can look like, it's really amazing to help folks. And that's really what a lot of the questions strive to answer. When I'm reading through some of the comments that end up in the script on these live streams, I think a lot of folks are really just, aiming to get those larger, more complex questions answered for themselves, and I'm glad to do it. I really am. I don't have all the answers. I have answers that are based on my experiences and my history with the stock market. So I always premise anytime we're having any type of discussion, or somebody throws a stock pick out there for whatever reason, certainly there's no right or wrong answer when we're talking about the stock market. That's why it's so prudent to have these discussions, to always continue in the dialogue of making sure, new investors who are always coming into the message and asking some questions. I always try to throw out the two broad topics of, when I first started investing, I always thought it was amazing when I heard that you could invest in stock in your Roth IRA. That was just something that resonated with me. And when I did start, it was really just amazing to me, how limited we were in the resources. I left a comment in the Facebook group about how amazing of a time it is right now to be an investor. So I can bridge the way it was 20 years ago to be an investor, as opposed to the way that it is right now. And I basically summed it up by saying it's an exciting time to be an investor now. It's also a more difficult time to be an investor. There's so much information out there. Certain things can be extrapolated to be acted upon when it comes to the stock market. Other things really do just come in instinctually. They really do. Okay. I had somebody hit me up and say, do I think that the stock market is going to be coming to a crash in 2019? And for you guys that follow me extensively, you know that I don't think about the stock market in those definitive terms. I don't. What is fair to say is that we are late cycle. What makes me say that? Well, what makes me say that is I was invested in 2009, 2010 during the real estate bubble. You guys remember that. And for me, I remember it like yesterday. A lot of you guys may not even have had experience in the stock market. Maybe some of you guys were, but that's how the stock market can really turn on a dime. But since then, it's been on an absolute tear. So it's fair to acknowledge. Now, you don't use that as a definitive to say just because the stock market has been on an extended bull market for the last, let's say, 10 years, okay, that automatically means that the stock market is going to crash, okay? It doesn't mean that at all. And I've always said, and I've always tried to premise my comments on the stock market to say, look, what do we know? Okay, we're halfway through our current president's term. All right, he's implemented some tax cuts. We'll see how that goes through. Earnings came through this week, pretty good, right? I tend to not look at earnings quarters as being a determination for me on which direction I go as far as the stock market. I have, however, taken some profits and put them to the side, okay, right now. And I've had some discussion, that of which I'm going to speak about a little bit more in depth, about how important it is for you guys not to misconstrue my personal moves with what is going to be prudent for you guys, okay? If you're a young couple out there, and I know I'm speaking to at least one, all right, so I'm going to speak directly to you because I know you're in here. If you guys are, in your early 20s, early 30s, and you're just starting your investment career, then what does it really matter if we're in a late cycle right now? We could end up continuing on 2 or 3 years into this prolonged bull market, right? So it benefits you guys to keep your 10, 20, 25, 35, $40,000 of capital invested, continue to dollar cost average it. But what I did say is look at your program holistically. If there's opportunity and you're doing let's say the maximum funding, 500 a month, but you identify that you have an expenditure that comes up, or you have an unforeseen debt that comes up that you want to take care of, go ahead and take care of that. Now's not the time. You need to be jammed into sixth gear with the stock market in this condition. It just conditions your prudent thinking. You know, be diplomatic about your thinking. Don't be pragmatic. Don't hit me up and say, you know, Ryan, you're selling stock, therefore I have to sell stock as well. It doesn't mean that at all. It just means I'm taking profit right now, which I weathered a very, very heavy downturn 2 months ago. Now I'm given the opportunity to take some profit. Okay. So I came back on the Facebook position. You guys know, just for example, I had 90 shares of Facebook, 40 shares were outside of the Roth IRA, 50 shares were contained within the Roth IRA. The 40 shares that were outside, I picked up on the big downturn, right? And I was willing to take that stock into deep water, okay? Worked out really well. The earnings obviously came through very well. Very, very powerful stock. So I sold that position. When it went up after hours, I was able to exit the position. I made a quick $800 off of it, and I kept my initial 50 share block within the Roth IRA, that of which I'm still down in. But it was a way to kind of hedge that win that I had on Facebook, right? I took the chance, I invested, I was rewarded, and I took part of the profit off the table, and I'm still holding the 50 shares inside the Roth. That's just what I did. So that $800 profit will be taxed as earnings because it will be short-term capital gains tax, and that's just what we did. Just one small slice of kind of explaining my mindset a little bit, okay? I just don't think I don't think you have the opportunity to have the green light to sell all the time. If you guys find it that you're in a position that you're up, you know, some of you guys are throwing some interesting stock picks into the community here, Kronos being one of them, obviously a winner. Obviously very, very good if you got into that early. I've never invested into the name, but you know, some really good profit to be had across the board in the stock market. Amazon was a disappointment. I actually sold Amazon. I kind of broke my own rule, and I did actually sell Amazon before they reported. Saved myself a little bit on the downside for Amazon, but took a little bit of a loss in Amazon. Which, you know, for a portfolio like mine, when you have got that much capital invested, and my goal was to kind of scale back on some of the growth names that I've got. That's what we ended up doing. But I just noticed that my good friend has popped into the group here. I'm very, very chill this evening, if you didn't tell, because I've been sitting in front of a computer for a good majority of my days this week, and it's been pretty crazy. So I'm going to be pretty chill and just kind of bounce some of these ideas that I've got here in the live chat in the group. But I do see the financial investor who's made his way into the group. Very, very cool to see Brent. All obviously helps out immensely on the live streams as well. Just another think tank to drop your ideas off of. But I'm going to scan up to the top here. So I do want to welcome Dave and Brent as well, both representing their respective channels. If I see any others here that I recognize, I'll certainly shout out and give you guys some kudos and some thanks for making your way into the group. Some of the folks that are in here I've actually talked to personally over the phone, and that's really the opportunity to get down into the nitty-gritty. I do enjoy doing that. I also enjoy my time as well. So it was getting a little bit overburdensome there for a while, to be honest with you. But for the folks that did reach out to me directly, I really think that we probably made a big, big difference in, you know, a half hour, 45 minutes worth of time. And that's really what it takes. I don't have that type of an opportunity, especially doing 5-10 minute uploads to YouTube. You guys are lucky to get a small piece to the insight to something that you could actually take and deploy for yourself in your own investing lives. This is a little bit better because you can actually throw your questions at me, which is actually very, very cool. But it really doesn't reach the level of engagement unless I have the opportunity to really sit it kind of on the other side of you and take the conversation where I need it to go and ask the questions that I need to determine everything that we talk about. Honestly, I get hit with questions all the time that, you know, they're very, very good. They're very, very well founded, but there's always an answer for some of these questions that come up as far as, you know, when to sell a stock, you know, how much is too much single stock, what is the defensive mechanism to owning too much single stock, and you know, we'll continue to beat the drum on what some of those defensive mechanisms are, but try to separate what it is that I provide with regard to transparency in my own portfolio and what is going to be right for you guys. Okay, I come back to my couple as well that are just starting out. I would speak to you guys like I'm in your shoes. If I'm in my early 20s and I'm looking at this stock market right now, I'm very excited. The economy's very good. The products are very, very good nowadays. We can thank the late Jack Bogle, right, of Vanguard. Now there's a ton of different products on the market. I don't affiliate myself with Vanguard at all. It's just that I invest in them personally. For the exposure that they give you at the low expense that they give you, all of which is available on their website. So all things to consider when you're tuning into a financial piece like this. I really just think that the majority of people are extremely deficient when it comes to financial savvy, or at least financial awareness. And you don't have to have financial savvy right away, but at least some financial awareness. And a discussion like mine doesn't need to be inclusive. It can be, you know, search out your information on your own, search them out. I've got other channel creators that make their way in here as well, who deliver a lot of the same message and a lot of different material that I offer as well. So become holistic in your approach. And that'll help you define your own style that you want to deploy in the stock market. So really, really good stuff. I do want to scroll to the top here and kind of hit some of these. If not, I can actually start at the bottom and work up. I've already kind of replied to a ton of people up front. So I will actually start at the bottom. I've got Steve939 in the group here. Is it worth converting some of my 401k over to my Roth and pay the taxes now? I plan on retiring in 5 years. I would stay the course there. You know, that's certainly a question that I would run through a tax accountant, but it really kind of depends on a lot of things. 5 years, you know, you've got retirement right around the corner. I don't know if I would be, you're probably in an opportune time right now to do some liquidation, but avoiding taxes on what I would consider probably a larger amount is probably in your best interest, certainly. And keeping that money in that 401k growing into retirement is probably in your best interest there. It's a good question. Taxation questions, I always tend to try to, and I've done it too. I've picked up the phone and called and get your 5 minutes with a tax accountant and say, hey, here's what I've got. Another option is to lean on your broker. We offer through this channel, really not offer, but identify resources out there as far as different brokers. Most of you guys are already affiliated. So I would highly encourage you guys to not hesitate and pick up the phone. Obviously, you guys have a friend through YouTube that you can come in and rap with every Friday evening. But that's definitely a question that I would feel more comfortable if it were me and I were in that situation which I may be in a similar situation someday. It's just that my 401k like pension, not pension, but retirement account is more of the Roth variety. So it's easier to transfer right into an existing Roth account. So I know I have that option. I just don't want to tell you definitively what's going to be good for you. So just be kind of careful with that. And that's what I would do. I would pick up the phone, do it now. Okay. Don't allow the stock market to kind of get ahead of you a little bit. And then, you know, if we go into a 20 or 30% correction, which is possible, just like anything is possible. I don't want you to be caught with your pants down, pardon my pun a little bit, but if it goes down 20, 30%, we're going to be looking at keeping those funds in there and taking the option to sell off the table. So really good question. Thanks for leading off with a tax doozy for me. I really appreciate it. Like Clapton says, cocaine. Yep. Do you think it is? You're very welcome. Yeah, it's that time of the year. TurboTax has a chat personal now. Laugh out loud. That's always been my my tax software of choice. I like the cartoon graphics. They make it very cartoonish. It's very simple to follow through, and I'm familiar with them. I think I've been with them for about 9 years, I guess. So easy to import all of the investment documents. I'm actually done with my taxes. I'm just waiting for the investment stuff to roll in there and get that going. The tax refund for me doubled. So I don't know about anybody else. I think if you do have children out there, certainly beneficial there. You're going to get the child tax credit, the earned income credit, and the child tax credit. So if you guys have worked through that exercise now, and you do have dependents in that nature, please expect that your tax refund is going to go up, which brings into consideration the video that I did this week, hopefully it can take you that much farther, maybe give you some investment capital, but also give you some other opportunity to pay down debt, which is also very good, and also just to sock it away and put it into the savings account for a rainy day. That's a very, very prudent move to do, especially in this market. I'll probably be doing a combination of both. Actually, it'll probably all go to the savings, but I've already maximized the Roth contributions for this year. So I know most of that will basically backfill some of that funding that's already went to the Roths. So I've got Greg Cammie in the line here, and I just want to personally thank him as well. He asks, what are your selling criteria? I think my answer might really surprise you, but I tell you what, don't make it more difficult than it needs to be. My selling criteria is if I'm in the green, I may potentially look at taking profit. Okay. Now I tend to try to separate my long positions in my portfolio. I have positions in the portfolio, stocks that you can own forever. I don't come out with those videos just for fun. Okay, they are kind of fun. They're very popular videos on YouTube, but the difference in meaning for me is that those are stocks that I actually do own. Now, I did liquidate my position in Procter & Gamble, and I'm learning, again, one of those hard-earned lessons is that some of the worst mistakes that I've ever made as an investor is selling, okay? Now, some of the best moves that I've ever made as an investor is selling, okay? So don't be surprised. Don't be surprised if you take some profit off the table. And you just hit me at an interesting time right now, Greg, in that my goal is to try to clean up some of the exposure in my portfolio, spread out some of the very, very good quality names. I'm doing a recomb over the stock market, have some interest in entering into some positions, but I'm going to be entering those positions basically with 10 share blocks. I'm not going to be having multiple thousands of dollars and 100 share positions in stock that I've predominantly had over the last couple 2 or 3 years. That's really, really done well for me, very well. It could have not done well for me. It's just that I took the risk and it paid off. I'm looking to scale back on some of those higher positions where I would have stepped in and bought 30 shares of Caterpillar. I may look to just buy 10 and put a $1,300 position on it and be good with that, set it up for dividend reinvestment and move on to other aspects of the market. I'm also going to be looking at moving some of the Spider ETF positions into the first trade account and actually building a Spider ETF portfolio out of that smaller amount, keeping some cash in the Roth IRA and keeping my long dividend reinvestment program going on my dividend portfolio. Now, I do still have some positions that are still making up ground in CRM Salesforce and Adobe Systems. You guys know that I sold Amazon. I sold basically half of the Facebook position, and sold some other stock this week as well. I pushed $55,000 to the side this week just to kind of show you there is some validation for strong moves in the stock market. I've made some strong moves this week, hoping it works out. If it doesn't and the stock market continues to go up, I'm still very, very heavily invested. It's just that I want to be prepared just in case, because here's the thing, guys, when we go through an earnings week like we did this week, you can just sense the euphoria. It just irritates me. And to cut through the noise, honestly, the best thing you can do is actually pull the earnings reports or actually listen in on the calls that they offer to find out how your particular companies did. That's probably the best thing you can do. I take a little more of a lazy man's approach to where I just, I catch the analysts and the news, and if they've beat or they've raised guidance, and that's really the key. Is a lot of these companies this week that have reported have been a little bit light on guidance going forward, which is just kind of another telltale that I'm paying some attention to. There's economic chaos going on in certain parts of the world that is worth acknowledging. Venezuela comes to my mind. Very tragic what's going on there. I mean, they're on the brink of a civil war. China obviously has been pretty poor. If you look at some of the historical indicators of some of those economies, once they start to tailspin, it tends to lag a little bit in its impact of the U.S. Now, the one thing that the U.S. has going right now is that the U.S. economy is very strong. My question is, how long is it going to be? How much more prolonged is it going to be with all of these geopolitical risks going on in the world? I don't know. I will leave that answer rhetorically to you guys, but if anything, I just told you what I'm doing with my particular portfolio. Again, not to be misconstrued with your ideas. If you've got $10,000 of investment capital, you've got some pretty good savings, stay long, okay? Typically, holding in the stock market is probably one of the best moves that you could ever make. And that's typically, the one thing that people shy away from in their decision making is that they typically think that they have to do something all the time. And I contend that you typically the best decision that you could make in the stock market is to hold most of the time. And that's especially true for anybody that's holding less than, I'm going to cap it at $25,000, guys. That's kind of my threshold. If you've got over $25,000, I mean, I did a video during October that called out all portfolios over $500,000. And I had some folks really thanking me for that, to say, look, listen, Jesus, the stock market can continue to just kill it and go up, okay? But what are you trying to get out of the stock market at this point? Are you continuing to think that there's going to be 20, 30% to the upside? Maybe. And for you guys that I'm talking to with 10, 20, 25,000 invested right now in the market, you guys will be the ones that capitalize, right? But if you're looking at over 25, 50, maybe six figures in a portfolio, right? The strategy for you might be a little bit different than the person who's just started investing, got a little bit more time on their hand, maybe can weather a downturn in the market, and really it should be prudent for them to stay long the market, okay? That's just the difference in application. And again, this is why we do a 2-hour live feed every single Friday to revolve around some of these topics, guys. So AT&T I've got down here is a good stock long term. I hold 100 shares right now. That's one of those positions I'm down a little bit on. I picked up AT&T at 34, so quite some time ago, and I've gained a couple shares free of charge in it over the course of holding it here. But I am holding AT&T long here, 100 shares. That's one of my long positions. Does dividend investing relate to value stocks? John Darby asks a really good question. It does. That absolutely does. That's really kind of the one tried and true definitions of a good value stock. You just have to be kind of careful not to associate a higher than average dividend. And I'll take oil stocks out of that equation. ExxonMobil, Chevron both kind of blew out the numbers today. They reported very good quarters. I'm long stockholder on both of those names. I like best of breed. I was hit with a question prior to coming on for the stream tonight on how to avoid a stock going bankrupt on you. You know, how do you avoid holding a stock that that ends up pulling a General Electric or maybe even worse, a Sears? Do you just continue to hold through the downturn? And that's really one of those things to where investing in the stock market carries risk. Okay, you have to understand that. And if you're going to be worried about buying Caterpillar and that it goes bankrupt tomorrow, perhaps maybe buying a Caterpillar isn't within your risk tolerance yet. Okay. Now, the defense mechanism is just to buy the industrial spider ETF if you want exposure to the industrials, or you can broaden out again. Remember, all of these solutions are built to be layered. Okay. That's why we talk about the S&P 500 or the total stock market, S&P 500, small cap, mid cap, sector spider ETFs, then your single stock exposure, and then your fixed equities. What I just outlined to you guys, those are the products. Those are the there's not an infinite amount of products on the market. Now, all of those different things that I just outlined, especially single stock, can be packaged up in a mutual fund in an infinite amount of ways and then sold to you in different groupings, okay? But I tend to try to make it as easy as I possibly can by just keeping the Vanguard in the discussion, and that's kind of where we start. If you guys want to go to the State Street offerings or the BlackRock offerings or the iShares, right? You guys have heard of all these. Go ahead and do that. That's fine. The idea is that you just get the seed planted on the Independent Investor channel, and you can say, you know what? There's other S&P 500 index funds out there or ETFs. I'd like to at least research them. But there's a reason why I offer the Vanguard products in the manner that I do. All right. So kind of a twofold solution there. But I want to get to some of these questions here. 12% yield. That always makes me cringe a little bit. I'm at the very bottom. Somebody says, where's Lydia? I don't know. She's probably caught in 405 traffic right now. You guys ever been to Los Angeles? It's a lot of fun, man. She's probably listening to the live stream, but she's not typing and driving at the same time. So ExxonMobil has been amazing over the past month. My best pick up for 2019. Yeah, it's been awesome. I just entered into the stock at the wrong time. The cool thing about ExxonMobil is they pay just an absolute mammoth dividend. And again, if you're a value investor, and you guys, I know you hit me up and you're like, Ryan, you're selling a lot of stock. That's great. My core positions don't move. They stay right there. Okay. So those are the anchors in the portfolio, which gives me a little bit more latitude to play a little bit. Right. and to maybe kind of move some stock to the side a little bit if that's what I deem necessary. It's just, and I have fun with it. I've manufactured a lot of money over the years, guys. Like kind of sick, to be honest with you. It's not hard work. I've done hard work. Investing in a stock and having it go up 10%, selling it for a profit. I don't know. I might have chapped my finger a little bit maybe by pushing the sell button. I mean, come on, let's be real. It's there's so much access to the market now that it's exciting to be a stock market investor now, man. It's exciting. What's even more exciting is if we can just kind of fine tune the mental makeup and the mental approach for just regular folks. You can make yourself wealthy. I proved that in the video that I released this week. But people don't think that way. One of my favorite books, Think and Grow Rich. It's the same idea. It's really a lot of the mental makeup. And to be honest with you guys, I'll tell you something from my personal playbook. If you're interested in some of my insight, I've always thought myself to be rich. I've always thought that way. Everything that I do, all of my activities, the things that I choose not to buy, my budgeting strategy, all of it is aimed to realizing what I've already got myself mentally, I've just got myself convinced, And there's some value in that, because if you continually tell yourself that there's no way you can make it, there's no way you'll ever have wealth, there's no way you can ever hold a budget, there's no way you can ever save. If you can tell yourself that over and over again, I've got news for you. It'll come true. It really will. And I think that's a lot of people's problem is their personal barrier. I really do. I think MO is a good stock. I do as well. If the kids inherit the Roth IRA, what is the required minimum distribution per year, and where can we find that data? I would Google that. I'm not going to hit that question. It's called an inherited Roth IRA after the kids get it, and there are distribution requirements out of that. Now, that doesn't mean that they can't just take that required distribution and throw it into their own Roth. You didn't hear that from me. But what's to say that they can't strategically take that and redeploy that tax-deferred money, or tax-free at that point, honestly, because it's still not going to be taxed in a Roth. But it becomes an inherited Roth IRA, which is one of the great benefits of a Roth, and that the heirs can take that and carry that legacy on. Probably kind of a page out of my own personal book. In that I'll probably do that for my kids as well, because I really don't care about the money. So let's cruise up here and see. I saw a comment in here that I want to get to if I can. So Ernest left a very interesting IRS RMD table 1 for inherited IRA. So I don't know if he dropped that in the Facebook group or if he dropped it into the comments here. Ernest, thank you for taking that for action. Really appreciate it. Bought some shares of Altria. Altria and Philip Morris have probably put in a bottom here. I'm not really sure what's moving the stocks. If you guys know, they haven't made any deal whatsoever. They're in a couple of decelerating businesses. So I understand the dividend is fat, especially in Philip Morris. I don't know what the Altria. It's probably big too. But I don't know. I do have some reservation about it. It's very highly rated right now to go ahead and buy right here in the mid 70s. But I don't know if I would touch it in the at the expense of other good names right here. There's a lot of pretty good bargains in the market here. Let me cruise up here. I have one question that I kind of wanted to get to that I saw out of the corner of my eye. If I can pick it out of the group here. I can't find it, man. This is quite the group here. Yep. So Golffish is in the group here. I definitely want to call out Golffish. Golffish has been like subscriber number 4 of the Independent Investor channel, so pretty loyal. Made a few moves today with positions in CAT and Intel and Pfizer, so that's kind of in line with what I'm talking about. I already own Pfizer and Intel. Pfizer, I own 80 shares, Intel 100 shares. So there's a couple examples of some bigger stock blocks that I've got. I did take position in Pfizer. It went down to 40. I got lucky. I bought it again. So just a channeling example for you guys. I will repeat because that's worth repeating. Just because you buy a stock and you sell it doesn't mean that you can't monitor that stock after selling it. It comes back to Greg's point about when to sell a stock. If you're going to sell a stock, don't get mad if it continues to go up, all right? If you sell it and it ends up kind of adjusting back a little bit, you believe in the name, like of course Pfizer, right? I don't even know why it went down to 40 in the first place. So I went ahead and backed back into 60 shares of it, and now we're back in the name at 80 shares. Caterpillar, I was really disappointed I didn't pull the trigger at 120. That's kind of I've made a ton of money this week, and I'm not focused on the money that I've made in the market. I'm focused on missing an opportunity to pick up CAT. I did buy John Deere on a quick sell. I bought Boeing. Guys, I got really, really lucky this week. I bought Boeing right before it went up $25 a share. Just made a huge profit in Boeing. It was like a one-day 9% profit, boom, done, sold it, you know, and I didn't have to. You guys are going to say, Ryan, you're crazy for doing that. But a one day profit of 9% is, I mean, you annualize that and it's hundreds of percent of return if you annualize it. So, you know, a 9%, if you can pull that out in one day, I'm not a pig, I'm a realist. Okay, I'm going to take that profit every time and roll it into some safety. So I don't know if we have like 93 people in the group here, and I know Ernest corrected me last week, and he said these are very successful on YouTube. I'm very, very proud of the involvement of the live streams on YouTube, and I just want to thank each and every one of you guys who take their time to come in here to try to facilitate a discussion on personal finance. Again, I think it's one of those topics that needs to be focused on more. I really think that a lot of people would benefit. And for you guys that are making your way into the group, I hope you feel like you're really part of something special. But what would make me feel special is if I got at least one thumbs up. That would be cool, because right now I have 0. So I'm not really sure if my message is coming through or not, or if the thumbs up button is broke. YouTube might need to fix that. I don't know. We'll see. I'm watching it and it's not going up. So I think the thumbs up button is broke, but that's all right. Michael, I hope Sue justified. So you guys are talking amongst yourself, but I like that idea. It's just that when I'm buying those single stock positions now, I'm really trying to be careful with not scaling too much into the positions right here with the stock market. Now, listen, we're going to go into next week and the stock market's going to have to stand on its own 2 feet. So just kind of be careful again with your moves. I want to reemphasize, I'm not telling you guys not to invest. What I'm telling you is think in duality, okay? The stock market, for you guys that invested in, 3 months ago, how volatile it was. And I don't get any comments like that. Hey, remember just 5 weeks ago how crazy it was on Christmas Eve? That was a month ago, guys. So I hate to remind you and be a negative Nancy, but it's not about, I don't get emotional about the stock market. And that's part of the mental conditioning as well, is to know that you can enter into the market and not get over crazy if you're going to sell a stock. And that Greg's question about when to sell a stock, it goes so much deeper for me as far as an answer. I don't have a good one. It's a very simple answer. I don't typically sell a stock in the red. I broke that rule this week. I broke my rule by buying Amazon in the first place. Amazon is not a value play. Okay, it's not. And I compounded the problem by coupling Amazon with a pretty good purchase of Facebook at the time where it went back. Really one of my best stocks that it's made me partially wealthy over my life has been Apple Computers. That also took a huge haircut. So a little bit gun shy. So I did decide to go ahead and parlay some losses in Amazon before it reported, and I ended up being right. My stock moves this week were really good. I was really on a hot streak this week, pushing that cash to the side, and I'm gonna sit on the cash for a while. I'm going to be very close. I'm going to monitor the market. I'm going to monitor the positions that I have right now, and we're going to go from there. We're going to keep our longs long, and we're going to keep our shorts on a very short leash. Okay, so very good stuff. I'm always hesitant to take profit, thinking holding and buying the dip is better long term. You either need to close that position or remember to use that money on the same position. It's easier to hold. That's true, and it's really relative to everybody. You guys have to understand, when I sell a position, I still have a lot of other investments that are still working. Okay, so it really is relative. I just am speaking to, you know, my folks in their late teens. If there's at least one person in this group here that's in their later teens and's tuning into the channel, and they have the maturity to stick with it for a little bit, this information's life-changing to them, because I would love nothing more than to provide them with the bridge to just buying a diversified ETF and just sitting on it. Just sit on it. Just build it your whole life, you know, and it's one of the hardest, easiest things that you can do. Very, very few people do that. We run the compounding calculators like I did for you guys this week to demonstrate the power of compounding interest, but very, very few people follow that level of disciplined program. I guess the good thing about financial planners is typically, aside from the fees, it's typically out of sight, out of mind, which is probably one of the downfalls of self-directed investing, is that you can go on there and sell a stock within a minute and have your profit right there, redeploy it the next day if that's what you want. So it's very, very powerful. The idea is that you work really hard to get it set up to avoid those fees and then leave it alone, right? So it's really good stuff. Let me cruise up here and see if I can get to some of these other questions. We've been going about an hour already. It seems like I've been on here for 5 minutes, honestly. So let me cruise up here. I want to get my regular 401k. I've got a discussion going on with K9 about the right moves, about moving 401k money into Roth IRA conversion. Probably a conversation that I'd like to have in the Facebook group. That way multiple people can benefit. I'd like to keep this a little bit more kind of stock picks and easier discussion tonight. My brain is like mush after working this week. It's been pretty crazy. I've got King Hughes. Good evening, Ryan. From the long-term perspective, 25 years plus, is there any material difference between VOO, SPY, and IVV? The answer is no. The obvious difference is the price. The expense ratio is a touch different. And I think the IVV carries a 0.08, if I'm not mistaken. SPY is kind of around that range. We're splitting hairs because it's the exact same coverage. I'm quite certain. I don't know if Ernest has looked into those as well in the Facebook group to really get a little bit more than a surface level answer to you guys. But you could succeed with any of those S&P 500 ETFs, in my opinion. I don't know if SPY gives you that much more of a strategic advantage for the little bit higher expense. I think IVV is 0.08, which is double. So the VOO over 40 years is going to cost you $7,000 over 40 years investing into it. The other one's going to cost you $14,000. So I think the longer that you own the ETF, the more it's going to rear its ugly head at you a little bit. So, but really good question. Thank you for that. Looking to add some solid dividend REITs and companies, Q, Well, IRM, and CTRE. Any thoughts? Not off the top of my head. I don't. Not on those names. I'd have to look into them specifically, but certainly Same idea with just being kind of careful with your single stock entries. You know, buy 5 shares, for crying out loud. We've given you guys the buckets or the accounts to go in there and accumulate shares as quickly or as slowly as you want. And as something that may really strike or resonate with a lot of you guys, is don't look at entering stock position as one of those things to where you have $100, you want to invest that $100 and you're going to buy 4.4 shares of the stock. Think about it differently. Make a goal to buy 1 share of AT&T per month. Perfect. We give you those accounts to do that in either M1 or the first trade option or whatever brokers you guys have. If you have the opportunity to enter into those stock picks, and you can accumulate the shares, especially in M1, which in my opinion, I think they're the only one that offers partial shares on the open market, which is a really big deal for you guys that want exposure to like Google or Booking Holdings or some of these other fine names that are out there that you can just accumulate 1/10 of the share if that's what you want. But just think about setting yourself up on a goal for accumulating a share over the next 6 months of AT&T, for example. Buy 2 shares a month, $80, whatever you want to do, $60, whatever. It's trading at $30 a share right now, so $60 for 2 shares. Maybe add a couple names there, and you're doing what I consider a very, very good dollar cost average program on a stock. It's not going to cost you anything. Now it's free of charge to enter these good names. So just kind of keep that in mind, some of the strategic options that you have now in some of these accounts that I never had access to when I started investing. So just the sky's the limit for you guys if you want to leverage the power of the stock market, no doubt about it. I've got poke on the line. Some of my favorite food is poke. That's probably pokey, but poke is one of my favorites. My most expensive stock is LMT. Lockheed Martin's not expensive, actually. It's actually very well valued right now. Just another name I bought, made good money on this week and sold it. I stare at it every day. Okay. Well, I will address that because it probably speaks a little bit to your risk tolerance. And I'm not picking fun at you. I'm not poking fun at you. No pun intended at all. You obviously tripped and fell into one of the best defense subsector of the industrial sector of stocks, in my opinion. Boeing, Raytheon. I own a long position in Northrop Grumman. And UTX. You guys know that. Those stock picks, they haven't moved. They're not going anywhere. There was one other that I felt like it was worth mentioning, Honeywell. So that's really it right there. So you tripped and fell into a very, very good stock. And no, it's not expensive. Just because it's 370, 360 and change, whatever it is, the valuation is right. The price to growth is worth it. So if you're staring at it every day, I would consider maybe taking a little bit more passive approach. Don't get addicted to the feeling that you're going to get when you watch it go up, and then the feeling that you get when you watch it go down. I mean, I'm really getting psychological on what really consumes people in the stock market. It's really kind of unfortunate a little bit because it can be your worst enemy and tear you away from what you're supposed to be doing in the market, and that's going ahead and investing and leaving it alone, because there's no amount of staring at a particular stock position that's going to make you somehow pull a Tiger Town, and make it go up or something. I'm probably dating myself to one of my old movies that I used to watch when I was a kid. But yeah, I mean, that's coming from Warren Buffett, actually. The stock doesn't care that you're thinking about it all the time. It's going to go where it's going to go, and you make the best decision. You only own 2 shares. I'd like to know in reference to your other holdings what you have, to kind of buffer that LMT holding, because there's probably other major industrial names. John Deere is another one that's very, very well valued right here. Goodbye. Some other stuff too. I really did a deep dive into the stock market this week, actually last weekend and the beginning of this week. I did a pretty good deep dive and just kind of combed over valuations of the stocks that I covered. Lots of good stuff. FedEx is a good one. Bank of America is probably the best value as far as financials go right here. Peggy on that was 0.54. That was a good one. So I went ahead and bought 50 shares, just a small position in the stock. Again, I'm not getting crazy. I still own, I reestablished a small position in Wells Fargo. It was just too intriguing. They're too good of a bank. And I'm not talking about the account scandal, guys. That's surface level stuff. I'm talking about the business that they have, corporate lending, etc. They're a powerhouse. Citigroup and JP Morgan as well. So those are the banks that I own. You guys know I had Morgan Stanley. I sold them from a profit, so we're good there. But we rolled some of that into Bank of America here. So almost going on an hour. I'm not really sure if I'm going to go for a full 2 hours. I always say that, and then I always end up going for about an hour and 50 minutes every single week. But Aloha says, you look tired, brother. That's because I am. There's no doubt. My eyes are sinking in the back of my head. But don't want to miss the live stream, man. I really do enjoy it. It's actually quite relaxing to have a financial discussion for 2 hours with a group of friends, none of which, there's no way I could do this at work, right? So it gives me the opportunity to talk about my favorite topic, with the idea that somebody might be on the other end here listening in. And the quicker we can get this information into the hands of our younger folks, man. I know I've got some older folks here in the group. I mean, I'm 41. 40's good. But for some of my folks in their 20s, 30s, I've got enough credibility to where I can sit across from you guys and really talk and hopefully accelerate your awareness to the power of investing. And it's powerful. It really is. And that's the title of this video was really aimed at catching some people's attention, but I honestly feel that way. I really do feel like there's a lot of just BS out there when it comes to money. We don't teach this stuff in school. Did you guys remember being taught personal budget finance 101 in high school? Of course not. They don't teach it. They want you to understand that going and getting a regular job, and you get conditioned very fast into doing that. And it kind of gets you into that mental conditioning that, maybe I don't know. I really don't know. But I tell you what, for the folks that can break free from that and really acknowledge and say, you know what, I really want to have this stuff under control. The tools are there for me. Validate the tools that we push out there through the bucket or the account and the products that we discuss. Those two things right there, and how to use those things together in harmony with what we're trying to achieve on the wealth preservation side and the tax protection. That's the Independent Investor channel in a nutshell. Those 4 pillars. We talk about them all the time in 1,000 different ways. And that's really the key of the message. So for you guys that are tuning in and you're new to investing, those are the people that I do it for, even if I am dead tired. But it's all right. I'll get my break after I'm done. And I don't mind working hard for you guys. I really don't. I get a lot out of this, this interaction with you guys. I appreciate it. Haha, no more ugly kitchen shoots. You heard me call him out on his new studio. It's pretty legit. I'd like to know where you got that chair, brother, that cockpit chair that you have. It's awesome, man. It's like you're up in a wheelhouse of a multi-million-dollar boat or something, man, like a yacht. It's awesome. But let me cruise up here. I've got Bob Wright in the group here. It's awesome. Thanks for your loyalty. Appreciate you popping in here. Love the title, How True. Yeah, it is. It's my honest feeling. I'm disappointed a lot in, how things can be interpreted by certain people. And I think a lot of it is misleading at best. Getting people to understand what their options are. Even insurance is just terrible. You guys should really be shopping around for your insurance. You pile a bunch of these things together, like the tax return idea that I gave you guys this week. There's a lot of different hacks that you can do. One that I really wanted to mention that I haven't mentioned on the YouTube channel yet, and I'll mention it now, is the power of eBay. And for you guys that have ever run a garage sale, I hate them. I hate them because I love providing people a deal. I get it, but it's just kind of like pathetic. At the end of the day, I'm kind of like, I don't need your quarter. Just take it. It's yours. Take it. And I end up giving stuff away for free. But on eBay, a little bit different. You know, we've found that some of the name brand stuff that even we buy at TJ Maxx at a discount, we can throw that stuff on eBay and get, 25, sometimes 50% of the recovery back out of what we've paid. It's amazing. So just to kind of give you an idea, it just takes a little bit to set up the account. It takes a little bit to get familiar with posting stuff online. But God, guys, if you're not a participant in e-commerce in some form or fashion, you may be missing out a little bit. For an older fella like me that's 41, I held out a long time before I just said, you know what, to hell with it. I'm gonna educate myself up on these platforms. But I think there's probably some of you guys in the group tonight that are probably doing fine to supplement some income a little bit by using the power of Craigslist and by using the power of eBay. Both of those things can turn in some good passive income. As far as I'm concerned. A lot of other different ways to do it, but that's just one I wanted to share with you guys. So pretty awesome. So scrolling up through, I've got Brunelop 17. It says, I like Jeremy, has very entertaining. That's awesome. That's good. That's good. Entertainment is good. Entertainment's good. I typically like to get my entertainment from Las Vegas if I'm going to go and do that or something. But that's cool. I appreciate your comment there. That's good. Earnings reports for my stocks did me no favors this week. Laugh out loud. I'd like to know what you're referring to. I thought overall the earnings were pretty good. There was a couple of dogs thrown in there as well. Intel was kind of a struggle. AT&T, I didn't look at the numbers, but something was a struggle there. What were some of the other dogs, I think, this week? Not too many. There was some pretty good stuff. Caterpillar, obviously, that was a buying opportunity. That was just stupid, and I missed it. That was the big problem for me because I've really been waiting for my opportunity in Caterpillar. Never owned it actually, and had my opportunity for about one day, and it's jumped up 10 bits. I'll probably end up just buying it anyway, but I had my opportunity at 120, I think, is what we were looking at. So. In Munch, I've got my happy couple in the group here giving me a thumbs up. I appreciate it. That's awesome. Thanks, guys, for coming in and taking your time to do that. If you ever have any questions about your own situation, don't hesitate to just hit me up. Try to keep the emails. This is kind of for everybody. Keep them as short as you can because I get inundated with emails. There may be a time, unless we just stall out at 11,676 subscribers to the Independent Investor channel. Unless we just stall out and stop growing, I don't know if that's possible. I don't know if we've created a monster here. I don't know. But the direct messaging is going to become a little bit overwhelming for me. I'll still do the best I can. If I had all day to just answer direct messaging, I would, but I don't have that kind of time. I really don't. So, and I'm sure most of you guys understand that as well. Read the Kronos boat and still cruising. God, Doug, I don't know how the heck you do that. I don't understand. Are you like plugged in or hardwired into the stock market or something? That's amazing, man. Jeez, the weeds. Road, autocorrect, bites. Yeah, I know, but I knew what you meant, man. Making killer money on Kronos. Nice work. I love it. It's awesome. Let me cruise up here. Travis Haywood's in the group here. He's talking about a Spicer Capital new video that came out. I don't watch a lot of YouTube, guys, to be honest with you, man. I don't. I really don't. I don't even look at myself as a channel creator. Honestly, I look at myself as a channel offerer or something. I don't know. I'm busy doing other things most of my time. This is the one kind of escape that I can get on and talk about my passion with folks. And I know we're making an impact, no doubt about it. But I'll probably try to check that one out because I do like controversy. You guys would get a kick out of a controversial if I came out with one, but I won't do that. I won't. I'll continue to take the high road as far as that goes and focus on the folks that I'm doing the channel for. And that's the new investors that are coming in to seek out some guidance on how to become a self-directed investor. So that's the important thing. Good stuff. Thanks, Ryan, for being so down to earth. Yeah, I actually wanted to earmark this and talk about it a little bit. I appreciate the comment, but there's nothing special about what I do other than the fact that I'm transparent about what I do. I talk now a lot about the success I've had, but I've been through a lot of mistakes in the stock market, a lot of mistakes. Some of the mistakes I get pulsed in on a little bit. I feel like some of the questions that I get hit with, it's like you're trying really, really hard, but you're running the risk of making some of the mistakes that I've made in trying to overthink the stock market. What I mean by that is if you're constantly trying to find the next big thing in the stock market, if you're trying to find the next big drug that's come out that's going to, I don't know, solve balding, right? You get my drift. You're probably overthinking the market a little bit when at the end of the day, some of the most prudent moves that you can ever make is buying the best of breed. ExxonMobil is a perfect example. You're not going to lose a lot of money with Exxon. You're not going to gain a lot of money, but it's a good, solid investment for somebody that's looking for 9% of an energy exposure to their portfolio, right? So don't try to outsmart the stock market. There are thousands of analysts covering each and every stock. And it's probably fair to say, I heard one of the people that I follow or have followed in the past, Tony Robbins, it's very, very good, talked about the stock market in this way. The stock market is probably fairly valued, give or take 10% at any given time. So don't try to outsmart and try to find that needle in a haystack stock unless you're Doug Whitaker. Don't try to find that perfect stock. Find those best of breed stocks out there in the sectors. I could probably name 3 or 4 or 5 out of each sector that are really the cream of the crop. If you look at these ETF holdings, go onto the Vanguard website and test my theory. Look at some of the top holdings based on market cap. Look at some of the top holdings based on dividend criteria. Look at some of the top holdings. It'll give you a list of the top 10 holdings. In that top 10 holding, you're going to find names like Facebook, 3M, Apple, Microsoft, Oracle, Cisco, Intel, right? Those are the names you're going to find, JP Morgan, Chase, ExxonMobil, depending on what ETF exposure you're looking at. Those are the upper echelon, okay? Mutual funds are doing the same thing. They're charging a higher than average expense to enter into some of these long positions, rake in the dividend income, and then charge you a higher than average expense to own that product, okay? You're just cutting all that out by putting those good quality names into the bucket that'll allow your money to grow unobstructed going forward. Very, very important. All right, cool stuff. I had a good discussion with Brenny here. I noticed that you tend to sell stocks here and there. Do you mind discussing how and why you share some of them? I'm going to tell you the theme, and I'm not going to get too far into. I've mentioned a ton. I actually sold a ton of stock. Conversely, you guys remember during October, November, and December of late last year, I did not sell a stock for 3 months straight. Ask yourself, could you do that? Could you watch your money go down every single day? You know, that 20,000 video down that I came out with, that was real. That was real money. That wasn't monopoly. Okay. And so kind of ask yourself, do you have the risk tolerance that it takes to go through that long of a stretch, and know that the best thing to do is to hold, okay? Now I've just felt like with the best January that we've had since 1987, that it was time to go ahead and take some exposure off the table. Did I get a little bit lucky? Maybe. Could you argue that we're still in a downtrend? Yes. I'd have to look at resistance. If we broke resistance on the upside, we were approaching resistance on the charts today. So I don't know if we broke through that, but we're certainly hovering around the downtrending line on the charts. So I don't know what that means for the market. We will see, but I thought it was a prudent time to take some stock off the table. And that's really all it was right now, was an attempt to safeguard some cash right here at what I feel may be getting to an end of an economic cycle. That's just some of my feeling of what I see, what I sense, what I read. And we'll see how it works out. I mean, it could be the best move I ever made. It could be the worst move I ever made. Who knows? But if it's the worst move I ever made, I'll still win because I'm still invested in some of my long positions, right? So just kind of keep that in mind. So you going to bed? Good night. He wants to be on the live stream. You want to give Daddy lovin's? Okay, come here real quick. I thought you were going to show your Captain America. All right. Good night, kid. All right. I had to take a quick break for a second. Anyway, let me scroll down here, guys, and make sure that I am very tired. I may go for hour and 20 tonight and kind of give these guys an opportunity to review the live stream after, and not throw a 2 hour. They've been very, very successful. A lot of people are tuning back into them and combing through and getting a pulse of my feeling on the stock market. So let me cruise down here and make sure that I got to some of these on the bottom here. I've got hard times in the group here. That's one of the first ones. I don't even know. Expense ratio question in terms, is there a good calculation to compare the expense ratio versus the dividend of different but similar ETFs long term? Yeah, it's called the PEG-E. The dividend takes the PEG-E takes into consideration that very thing, but I tend to look at ETFs and their expense between 0.04 and 0.10 as being acceptable. Vanguard did an interesting thing. They did away with their investor shares. If you didn't notice, they lowered the entrance to the Admiral shares. It's still pretty hefty at $3,000, but it's not the insurmountable $10,000. So pretty interesting stuff. I'd have to reread your question again here. I am pretty tired, so I'm having a hard time kind of understanding a little bit what you're out there. But the PEG ratio really is the cost of a stock. That's one of my favorite metrics to use. It's price to earnings compared to its growth rate. And when you take that and you compare it, anything that is around a factor of 1 or less will end up giving you an idea if a stock is either undervalued or fair valued or maybe potentially overvalued. Now, it's not the end-all be-all for metrics, okay? So I want to warn you a little bit. Just because Bank of America is at a 0.54 PEG-E ratio that I mentioned to you guys doesn't mean that the investment is automatically going to go up, all right? So you just have to be kind of careful a little bit in your application of those metrics. But ETFs, I'm looking at an expense of 0.04 up to about 0.10. So 0.10 is going to get you into some of the spider ETFs on Vanguard. They're all about the same. And then 0.04 for some of your broader market ETFs as well. Terry Harris is in the group and says, I have not sold many stocks since before 1987. That's amazing. Oh my gosh. I can only imagine what that portfolio is worth. That is really awesome. Very cool to have you in the group. I'm really glad that you're here. I've got Matt Goodman, who I recognize from one of my comments. How did you decide what stocks to take off the table? That's really, really good. And I'm glad we're kind of revolving around this topic tonight. It wasn't necessarily that I didn't like Boeing. It was just that Boeing, for a specific example, ran up so fast. I actually got long the position, bought 10 shares of Boeing, and it went up. It went up $25 in one day, and I ended up selling it at 25. It settled down up 22. So that was just easy money. Like, I could have just as easily not taken the position. I was long Boeing. I was willing to own it for 10 years. I owned it one day. Took $250 off the table, and I lived to fight another day. Now I'm monitoring in the stock. Now, if the stock market gets whacked, you think Boeing is going to be the shining star that continues to go up? I think not. So I keep those channels in the back of my mind. And, you know, first time I've ever bought Boeing was this week. I owned it one day. It's fine. I've owned UTX for probably over 5 years. I've raked in so many dividends with UTX, I can't even tell you. Now, has the stock appreciated? Not much, but I'm an investor in the company. I really believe in what they do. A very good company, very diversified piece of business. I don't mind having my money. I feel the same way about 3M, same way. But I really think my theme this week was to shore up some cash a little bit, redeploy. We're putting you into some options to take money off of the table free of charge, which was really a heartburn for a lot of people who came to the channel initially and was like, okay, interesting, Ryan, I get it, but I don't want to pay $7 entry and exit to buy and sell stock. I don't want to do that. That's gone now, right? So if you enter into a position and you've got, you know, a $500 position on a stock and it goes up, you know, $100, what's to say that you can't just take the position, live to fight another day, put it on the side, roll back into it? I know a lot of people will talk about general rules of selling 50% when it's up X amount of percentage. I don't write myself rules like that. I don't. And the freedom and flexibility that I afford myself, I'm not going to be able to teach, you know, hundreds of thousands of people over YouTube my philosophy. But at least you can hear my philosophy and understand some of my rationale for making some of the moves that I made this week. While everybody else was euphoric, I was diplomatically selling, okay? And I've learned to be somewhat strong in the stock market. You got to make strong moves sometimes. All right. Now, I may be wrong on those, but I tell you what, guys, a vast majority of those moves end up being right if they're strong and not overreactive. Okay. I wouldn't sit here in front of you mid-December when the stock market's in turmoil and say, I'm selling all my stock. I'm right. And I'm selling all my stock, and that's what you need to do because that's the right decision to make. I would never, ever do that. I think it was the contrary during that time. If you'd like to go back and review my videos, you can do that. But I think I was talking about that. You need to just hold, calm down, don't do anything. This is normal, which it was really not that normal. It was very volatile. The VIX really did spike. And but taking profit off the table right now is something that I felt was prudent. With the idea to kind of take some of my exposure off the table. I think we have more downside risk than we do upside potential. And again, I'm set up to win either way. This is a philosophy that is very, very, very difficult to teach people to wrap their minds around, in that you always want to think and put yourself in a position to benefit in a downtrending market or an uptrending market. Put yourself in a position to benefit in either market. Very, very important. That's right. I recognize Terry from New Zealand. That's awesome. Spark, which is the biggest telecom company in New Zealand. Awesome. I love getting those international companies thrown in here. Not yet retirement is 65 or so here in New Zealand. Want a few more years of investment time. Good for you, man. It's really good to have you in the group. It really is. I'm honored. It's very cool. Thank you for your thorough answer, Matt. No problem, man. And I don't want to get too personal here, but congratulations to you. If I understand your opportunity with your investing in yourself and dealing through your law debt as well. So get that stuff paid off, and it's going to pay off big in the future. Congratulations to you. Good stuff. Been at this a while now. Well, Terry, if you've been at this a while, what am I doing wrong? Maybe you can teach the independent investor a thing or two. I'm always open to learning, and tell you what, there's some really good minds in here. Dave and Brent are two of them. Some cool stuff, man. And I actually respect those guys. That's why I endorse both of them. I'm always down to learn more about the stock market. It's one of those crazy topics to where you can't really have all the answers. You can't. And that's what I think keeps people coming back and interested in the stock market, because there is a lot of potential. I mean, this week I could do no wrong. I've gone through weeks where I could do no right. But at the same time, if the majority of your, investing adventures turn out to be more positive than negative, then is it worth it? I contend that it is. So really good stuff. Yeah. So anyway, I want to cruise down here. Thank you for all. Well, just time in the market where you get your growth. It is time in the market where you get your growth. That's very true. I do agree with that. And that's why I tend to keep my core positions. I actually, yeah, it's not whiskey, it's bourbon. But the time in the market is very, very important. I get that, and that's why a lot of my capital that I have, I demonstrate different rules for different pillars in my portfolio. Okay. And I've expressed this a few times. With my employee sponsored account, I actually dividend reinvest, dollar cost average that in accordance with all of the passive rules that exist, all of them. And I guess my response to that is what, if I was sitting on a couple of accounts and those accounts were worth $100,000, would it be prudent to take each of those accounts and just right now at 41, put them into a passive vehicle in this particular account, in this particular market? I think not. That's just my choice. Now, if I do end up getting a tailspin over the next, let's say, couple of years, I will look to move some of that money more passively to get a better entry than what I think I have right now at this particular juncture. A lot of you guys are going to be like, this sounds like timing the market, Ryan. Don't do it. Just invest and hold forever, blah, 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 right? Well, I'm already doing that, okay? So what I'd like to do is try to enter the self-directed Roth IRA accounts a lot more dividend driven. That's my goal for those. I've got the fixed equity pillar, and I got to tell you guys, it's really been enjoyable for me to own the ETFs, those passive ETFs with the fixed equities. Very enjoyable to counterbalance the other aspects of the portfolio. So I hear you. I do. I think I wish I would have got that information in my 20s because it's a lot of reason why I do the independent investor channel, because I know that advice that Terry offered for anybody in here that's going to review this video, that's watching it tonight and really, really can resonate toward that message right there. It's not timing the market, it's time in the market. And that's probably the most true thing. The problem with it is most people can't trip and fall and enter into the right account, the right mix of products with the right allocation, and then have the discipline to stay the course as you suggest, which is really the secret sauce to investing. It really is. And really, really cool conversation. I really appreciate you offering that, Terry, in the group. Awesome stuff. I just started a Roth last year, waited till the tail end of December when the definite drop happened. Yeah, that was a really rude awakening to the stock market, no doubt about it. Tough for anybody to get involved right now. Health care spending account, health savings account. You guys are on some good topics. Very nice. Ryan, why not add HSA accounts to the discussion? We could. I don't know much about them, to be honest with you. My parents actually do health savings accounts, and I'm not a big expert about them, James. And thank you for mentioning that. It really should be a discussion that we bring up, because I can tell you later on in life, that's probably one of the biggest factors or the biggest consumers of wealth, I think, is for an unforeseen event with regard to your health. I'd like to take that topic over to the Facebook group, actually. If there's some good articles that you know of, that's the drop point. That's why I built that group the way that I did, is for all that information to be put into threads over there for you guys to enjoy and to kick on to some of those topics. I just don't know much about it, okay? If you don't understand or you haven't followed the channel for very long, you'll get to kind of understand my affiliation. And that's just not something that I need right now with regard to my current employment. I'm good. I'm fairly well taken care of. It's not the best. It's not the worst. So I'm kind of a product of what the military folks get, and that's just what we get, and it's okay. It's okay. But guys, with that, we're going on about an hour and a half, and with your guys' permission, I'd like to end the live stream tonight on Terry Harris's comment to the group there. I really appreciate her input. I appreciate everybody kicking into the group here, helping us facilitate the discussion. Honestly, it was kind of a euphoric week this week. Wanted to kind of share some of the success in the stock market that I had. It's not a Doug type of success in any way, but it's success in any route. And for somebody that works as hard as I do for my money, as well as a lot of you guys out there work for yours, I think there's really something to be said about talking about both potentials in the stock market, whether or not it has the potential to continue up. That's what makes the stock market. We really don't know. The stock market has a weird way of humbling people in what they think is going to happen. And I would rather say that than to come out and say, I know that the stock market is somehow going to go into a crash in 2019, because that's just not true. Nobody has any idea what it's going to do. But I do think there's value in discussing where it currently is, how it reacts to your specific portfolio, or how you can do different things to kind of defense up or posture up on the market to get the maximum out of the stock market going forward, guys. So we've been going an hour and a half. I really want to wish everybody the rest of a good weekend. I'll be back next Friday as well to help carry on the discussion. Really appreciate it. This was a killer live feed for me, man. I very much appreciated. But I'm going to sign off just a touch early. Again, thanks to the channel creators that kicked in, helped foster the dialogue. I know there's going to be a lot of value that are had when the folks review this afterwards. But guys, I really want to wish you all the best, and we'll see you next Friday. Thank you so much. Have a great rest of the weekend. Appreciate you guys.